What's going on? Welcome back to the channel. So today we're going to talk to you about Qualcomm. Just came out with their earnings. I want to break it down on some absolute key takeaways that you need to be aware of, what the current data points are saying, and some support and resistance points that you need to be aware of going into tomorrow. Before we get into any of that, make sure to hit that thumbs up. And with that, let's get right to it. So I'm going to start off going over some of the data and then go over some of the highlights from their earnings. So it did close at 175 and change after hours, though. It did go down 4.5%, despite actually beating both on earnings per share and revenue. And the actual implied move going into this earnings was 5.98%. So kind of within the parameters. So that does mean 5.98% in either direction. But still, it looks as though similar to last earnings, it played out that you had green up until the day of their earnings. And then obviously post earnings, it just went down. So I don't know if that's going to be how it plays out or if it's buy the dip type of moment, but I also like to look at shorts and analyze what they are doing, and they did return 195,000 shares. So they obviously were returning quite a lot leading up to their earnings. So in my opinion, how I analyzed this, they actually did feel that their earnings was going to be a beat. So I think this is kind of surprising a lot of people out there, similar to AMD earnings. It just doesn't logically make sense. But just for transparency, this isn't a squeeze play, so that's not why I'm bringing up this information. Only 2.06% of the free float is being shorted. You did have kind of very high numbers of, options. So 53 million in calls, 22 million in puts, and today there was a grand total of 74.9 million in options premiums. 24 yesterday, 13 the day prior. So you did have record numbers of actual options. So absolute craziness there. And 46% of all the options being done were optimistic in nature. And the consensus was that it was going to be roughly around that 190. So kind of polar opposite to exactly what happened. Bears, though, they were kind of anticipating pretty much where it landed for the most part, so roughly around that 155. You also have with it closing at after hours around that 167 range. Going into tomorrow, it is right above this pivot point. So 167.50, definitely need to watch for that to hold. If not, this is where you could see a further breakdown based on the technicals. So 158 would be the following support. I don't see that being touched tomorrow. If anything, you'll be flirting with this pivot point, and depending on how it kind of momentum builds, or if people see this as a good buying opportunity, then you could see kind of a push in the middle there. So just kind of take note of that. There was only one rating that did come out so far post earnings, and that was a $195 price target done by TD Cowen Joshua, who has a 30% success rating, so not all that great. And then you did have one yesterday, $215. Bernstein Stacy, who has a 65% success rating, and I've never really understood why analysts give ratings before actual earnings itself. It just doesn't make sense whatsoever. But nonetheless, as a consensus, $195.16 is that price target, and that does represent a roughly 11% upside from here. So analysts are still very optimistic. In my opinion, this just might be kind of throwing it out there. I think just Wall Street had too high of expectations, but then again, I could be wrong. I think that's maybe why the market's seeing it as somewhat as a miss. But nonetheless, I am going to play this. It is only 6 minutes, so this does go over the absolute key highlights that you need to be aware of from an investor standpoint going into next couple of trading days. So let me know your viewpoint. Give yourself a shout out if you did buy, if you sold, or whatever else. And with that, let's get right to it.
Qualcomm targets $22 billion in non-handset revenues by 2029, with AI and automotive growth. Earnings call insights: Qualcomm QCOM Q1 2025 management view. Cristiano Amon, CEO, highlighted record revenues of $11.7 billion and non-GAAP EPS of $3.41, driven by chipset revenues reaching $10.1 billion, the first quarter exceeding $10 billion for QCT. Automotive and IoT revenues grew 61% and 36% year over year, respectively. He emphasized the company's commitment to achieving $22 billion in non-handset revenues by 2029. Amon noted strong traction for the Snapdragon 8 Elite platform, powering the Samsung Galaxy S25 series globally and driving AI integration in handsets. Design wins in PCs have exceeded 80 and are targeted to surpass 100 by 2026. Amon underscored the edge AI opportunity, stating the shift to on-device AI inference is poised to drive adoption across industries, particularly with Qualcomm's AI processors. CFO 𝗖𝗢𝗡𝗘𝗖𝗧 reported QCT handset revenues of $7.6 billion, a 13% year-over-year increase, and automotive revenues of $961 million, marking 61% growth. He highlighted the benefit of higher ASPs and premium-tier demand. 𝗖𝗢𝗡𝗘𝗖𝗧 confirmed $2.7 billion was returned to shareholders in the quarter, including $1.8 billion in stock repurchases. Outlook. Qualcomm forecasts Q2 fiscal 2025 revenues between $10.2 billion and $11 billion, with non-GAAP EPS expected at $2.70 to $2.90. QTL revenues are projected at $1.25 billion to $1.45 billion, while QCT revenues are expected to range from $8.9 billion to $9.5 billion. 𝗖𝗢𝗡𝗚𝗧 guided 10% year-over-year growth in QCT handset revenues for Q2, driven by increased shipments of Samsung Galaxy S25 smartphones. IoT and automotive revenues are projected to grow 15% and 50% year-over-year, respectively. Amon reaffirmed long-term targets, including $4 billion in Windows PC revenues by 2029 and significant growth in edge AI and automotive opportunities. Financial results. Q1 2025 revenues of $11.7 billion exceeded analysts' estimates of $10.9 billion. Non-GAAP EPS of $3.41 also surpassed the consensus estimate of $2.97. QCT achieved record revenues of $10.1 billion, with handset revenues of $7.6 billion and automotive revenues of $961 million. IoT revenues reached $1.5 billion, reflecting strong demand and new product launches. QTL revenues stood at $1.5 billion, with an EBT margin of 75%. Q&A. Joshua Buchalter, TD Cowen, inquired about QTL guidance and assumptions for unit shipments and royalty rates. CFO 𝗖𝗓𝗡𝗘𝗖𝗧 clarified that the guidance assumes flat or low single-digit growth in the overall market and does not include potential upside from subsidies in China. Samik Chatterjee, JP Morgan, asked about the adoption curve for Snapdragon X PCs. CEO Cristiano Amon highlighted over 80 design wins and growing retail market share in the U.S. for laptops priced above $800, with expectations to surpass 100 designs by 2026. 𝗖𝗧𝗪𝗧, Bernstein Research, questioned margin trends in QCT. 𝗖𝗢𝗡𝗚𝗧 attributed strong margins to premium-tier volume and content increases, which improve ASPs. Chris Queso, Wolfe Research, asked about seasonality in QCT. 𝗖𝗡𝗚𝗧 stated that the seasonality remains consistent, with Q1 as the high point for EPS and Q3 as the low point. Sentiment analysis. Analysts expressed a mix of optimism and clarification seeking, with a slightly positive tone overall. Key questions focused on the sustainability of growth in automotive and IoT, as well as the trajectory for premium-tier handsets. Management maintained a confident tone, particularly regarding long-term growth opportunities in AI and automotive. Phrases such as, "We are very pleased" and "well-positioned" were frequently used. Compared to the previous quarter, management's tone showed a stronger emphasis on AI and Snapdragon X traction, reflecting growing confidence in diversification initiatives. Quarter-over-quarter comparison. Q1 2025 revenues increased from Q4 2024's $10.2 billion, driven by record QCT performance. EPS also improved from $2.69 to $41. Automotive revenues accelerated from $899 million in Q4 2024 to $961 million, while IoT revenues decreased slightly from $1.7 billion. Guidance language shifted to emphasize AI-driven growth and premium-tier demand compared to a broader diversification focus in Q4 2024. Analysts' questions shifted from concerns about macroeconomic challenges to specific growth drivers like AI and PC adoption. Risks and concerns. Potential challenges in securing long-term agreements with key OEMs, including Huawei, were noted. 𝗖𝗡𝗚𝗧 confirmed that current guidance does not include potential revenues from a Huawei settlement. Analysts questioned the sustainability of premium-tier demand and average selling price growth, particularly in light of macroeconomic uncertainties. Management highlighted mitigation strategies, including diversification into automotive and IoT and leveraging AI to drive innovation. Final takeaway. Qualcomm delivered a strong Q1 2025 performance with record revenues and EPS, driven by growth in premium-tier handsets, automotive, and IoT. The company is well positioned to capitalize on edge AI opportunities and anticipates robust growth in non-handset revenues, targeting $22 billion by 2029. Confidence in Snapdragon X adoption and automotive traction underscores Qualcomm's strategic focus on diversification and innovation.